Hey, it's Jonathan Gurney. It is Friday. It is 4:06. It's tax season, so it's very, very busy, but wanted to keep you posted what I'm seeing. A lot of things going on in the world, as always. We're kind of in the middle of a difficult spot here. Um, Price action is okay after a really nice rally that we've seen the last 2 weeks. This week is a consolidation week, and we're kind of in the middle of nowhere, and I'll show that to you where I added a little bit yesterday that we are positive on the trade barely. It's kind of I want some exposure, but I do not want to have all of it in right now. Let's talk about the price action. First off, if you think this market is easy, the last 10 minutes moved 0.5%. It's just the way it is right now. This move right here is 0.5% in less than 20 minutes. And that's not easy. Like if you're in my position, you see this looks like it's going to test 4,500. Okay. So just to kind of give you some awareness, this happened yesterday, moved in 10 minutes, 1% lower. So it's tricky here. I want some exposure because we're holding key levels, but we're kind of in the middle of nowhere as I spoke earlier. So I'm going to start the 2-minute drill or the 3-minute drill and we'll get going. Okay, so here's the short-term chart. SPY is another way to emulate and show SPX, which is the S&P 500, which is what we are benchmarking. As you can see, this was really frustrating. I want to be candid about that. I missed this one. It's not fun. 2 weeks ago, I added at 42.90, 42.50, and 42.22. Got stopped out at 42.15. Said if we go below there, it gets ugly. And it did. We reversed, held the 5-day moving average, which is this orange line. You're like, why didn't you get in? Well, you got to understand, these are 3% moves. And so when this goes down another percent, I should have added, no doubt about it. And it's been frustrating. But it's difficult to say whether it's going to hold the 5-day or not. But it held the 5-day, which I needed to do a better job of just ignoring everybody and just basically saying it's holding the 5-day, it's in trend. Now, 46.40 was the level that I'm like, I don't think we get above that. And we did not, 46.37. So the levels are definitely working. You just cannot be biased. Today we tested 45.07. The key level was 4,500, and we're kind of in the middle of nowhere. The S&P 500 was actually negative for the week until the last 10 minutes. This was down 0.4%, and my performance for the week would have beat the index had it not been for that. So just understand that this is how it works sometimes. So I'm behind the S&P 500 a little bit, not much at all. So I'm right where I want to be. Obviously, we were ahead by almost 9% 2 weeks ago. So that's really frustrating. I get it. Last week was a really frustrating, very frustrating mentally for me. Needed to take a breather and regather. And so now at least I am reading the tape well. Did not add here. Adding here would have been disastrous. So usually after these moves, you get a 3 to 5% dip. It's kind of where we're at. We're kind of in no man's land. In my opinion, until we can get above like 40, this trend line right here, which is like 45.65, it's still a little bit iffy. We're still below. Are we below there? Yes, we're still below the 5-day moving average, which is still, that means it's currently a short-term downtrend. Medium term, no doubt, I totally believe it's uptrend, but short term, we were still below the 5-day moving average. So you can kind of see I want some exposure because at any time, if we get any good news on the war, it's going to take off. So I want some exposure, and I think that exposure should be about 25%. We were down 0.2% or 20 basis points with 20 minutes left, and it rallied. So not much you can do about that. That is a short hedge, in my opinion, a short squeeze. But I'm optimistic because a lot of times when you get these huge runs, you get 3 or so days And that's why I want some exposure, but until we can get above here and actually hold it, I'm going to be a little bit cautious. There's some definite concerns with the yield curve. So went over the weekly performance right here. We are going now over the S&P 500 level. Seasonality is actually okay for a little bit longer. Mid-April, it's okay. You're going to hear this a lot in the news. The 10 and 2-year Treasury yield, the inversion. I'm going to try to show that to you quickly. Let's see if I can find it. Watch list. There we go. I always keep this on the radar. So when the 10-year is less than the 2-year, that is concerning. The 10-year should be above the 2-year yield, meaning if you hold longer, you should get more money. When this inverts, this has been very accurate in predicting recessions, but calm down. Here's a little data for you. The previous 4 times a 2 and 10-year curve inverted shows the S&P 500 rallied for on average 17 months, gained 28% until the ultimate peak. So the news is going to go over this and hit it with a dead horse until everybody freaks out. But the reality is price action is not dying here. Okay, so just wanted to be real about that. Good things happen for a decent amount of time. It freaks everybody out at the time. So what have we learned, which I have been talking about in many of my videos, is this. Eventually, you're going to get worse and worse news and the market's going to rally. The news got worse. I got stopped out, which is unfortunate. I had a stop here, which was the right decision at the time, but it took off overnight, and that was very, very frustrating mentally. And then we gapped up, and of course, from there, it's just mentally exhausting, not easy to cope with. So I missed that one, but I'm not going. I know the key levels. This was a huge level. Now we're at a really, really important level, which is 45.65. We're just below that, so we're a little bit in no man's land. We're at 45.45, want 25% on. I would not be surprised if at some point we test the 200-day moving average. Would not be uncommon. We got close, as you can see here, to 4,500. So overall, that's my game plan. Is I want some exposure, but I don't want to push too hard here. This is a squeeze. Is that real? I don't know. Is this real buying, or is it just trying to get people off sides? We will see very, very quickly. Seasonality is good for the remainder, for, like I said, a couple weeks. So just wanted to get this out to you. Short video, quick and to the point. Overall, midterm, the trend is up, which is good. These moving averages, and the 50-day moving average is starting to trend higher. That's a good thing. So a lot of good things. Short term, though, 5-day moving average tipping down. So we need a little short-term caution. And I think the exposure that we have right now is the right exposure, knowing a lot of things can happen with the war over a weekend. A lot of good things or bad things. And so at this time, after this big rally, just choosing to be a little bit cautious, and at key levels such as 4,500 or 45, I believe, 45.85 right here is a 200-day moving average. So it's really interesting. People call this the death cross, where the 50-day moving average crosses the 200-day moving average. And it usually leads to bad things. Well, what happened? Boom. So everybody was waiting for that freak out moment, and we added where we should have. We just got stopped out, and it was mentally exhausting through here. Kept thinking this was going to break down every day, and it, toward the end of the day, usually took off. So it's my fault, but overall, we're still keeping pace to the S&P 500. Wish we had done much better through that period, but I'm not going to buy here. I'm not. So overall, this is not a bad entry spot. We got in yesterday at the freak out right here. That's a big, ugly candle. And it moved, like I said, about a percent in a very short period. And it looked a little bit like I was going to do that today. So I'm like, hands off, don't do anything stupid here. So have a great weekend. It's tax season, so it's really, really busy, but just want to get this out to you guys. Have a great weekend. Bye.